Hi, good afternoon or good morning, everyone. Thank you so much for joining us today, whether you're in person, online, or you're watching us a little bit later. I'm so glad that you're joining us. My name is Sokha Yous. I'm a financial wellness counselor here. And today we're going to talk about building strong money habits. I'm a financial wellness counselor here with Mayo Employees Federal Credit Union. I've been in the personal finance sector for 20 years now, exactly 20 years this year. So it's a big passion of mine. So this is my contact information. It's best to send me an email. If you can't write this down now, you can always go to our website at mayocreditunion.org, and you'll be able to go to the education tab, and then my contact information will be on there. I'll also give my contact information at the end of the presentation as well. So again, if you have any questions at any time, please interrupt, and then I'll do my best to answer it right then and there. But if you're a little shy, you can always send me an email, and reach out to me, so that way we can discuss it a little bit further. So first on the list, on the agenda today, why your money habits matter, assess your current financial picture, audit your financial habits, steps to develop healthy money habits, and how to shift your mindset. So we're going to talk a little bit more about that. If you have any questions during any of the steps here, or if you want me to slow down, I'll be more than happy to do that. So it kind of went a little faster. So first on the agenda, what is a money habit? So to basically put it, money habits refer to the recurring patterns of how individuals manage, spend, save, and invest their money. And these habits are influenced heavily by personal values, your own beliefs, and attitude towards money, shaping financial decisions and overall financial well-being. So it's really important that you really address and kind of take a look at your money habits. What does that look like for you? Is it working for you? Is it not working for you? If it's not working for you, what can we do to go ahead and shift it a little bit, so that way we can put you on a different track towards your financial goals, instead of just continuing on with the bad habits? Or do you not know that your habits are good habits or bad habits? Why money habits matter. So financial success is built through habits. So a lot of times when I talk to people, they're saying, they feel a certain way about money. They feel this, they feel that about money. So money really is emotional, because money isn't just about math. It's tied to our own security, having a place to live, identity. I'm just bad with money. It's tied to your own self-worth, the way you talk about yourself when it comes to finances. And it really affects your relationships. There's different relationships with your money, and also with your partner, with family, different spending patterns, different spending styles and saving styles and stuff. So if it causes a lot of arguments and rift in relationships and stuff. So it's really important why you understand that money really is emotional. It's just not, a number that's sitting in your bank account or in your investment account. It really drives people to be who they are. If you are feeling safe and you are feeling secured financially, then it's a lot easier for you to take, risk in life, whether you want to go for another degree, or just get another vehicle, or travel somewhere. You don't have to worry about feeling guilty or feeling bad and not having the money and stuff. So when I say, money is emotional, it truly is. So it's really important how it's really important that you assess how emotionally tied you are to your own finances. So, and also many financial habits really does start in your childhood. Small daily decisions like saving a few dollars or avoiding unnecessary purchases may seem insignificant at first. Over time, these choices compound into powerful habits that shape your financial future. So it's really important that you really address that too. Take a look at your parents, your grandparents, how you grew up. Were they just kind of comfortable with the struggle? Did you grow up in a household that was open about finances, that talked about money, that talked about investment? That really shapes who you are in the future too. So many people assume financial success comes from earning a high income. Well, income really is important, and it does help, but it isn't the only factor. I don't know if you've heard this book called Millionaire Next Door, or There's plenty of people that retire that just works regular, jobs that are making $50, $60, $70,000 a year, but they're retiring millionaires, or they could be in their 50s or 60s or 40s, and they already have millions as a total asset. So it doesn't matter how much money you're making, it's how you invest in it and how you use your money. And so think about two individuals. One is earning $50,000 a year, follows the budget, saves consistently, avoid unnecessary debt, invests regularly. And another person that's making $100,000 a year but spends every dollar, carries credit card balances, and save very little. It's really easy to figure out who's going to be more financially secured in about 20 years if they do not change their habits, right? In many cases, it's the first person. So the difference really isn't income, it's habits. So I think there was a study that came out from Bankrate in 2025 that says that approximately 32 to 36% of people that are making $100,000 or more are living paycheck to paycheck. So these are the new, studies that are coming out. So it's really important to know that if you find yourself in this situation, really assess, audit your accounts, really assess your feelings towards money, whether it's something that you can, fix or not, or if you need a second set of eyes to see what kind of habits, you're doing day to day, just so you can change your financial future. But also understand that things are very expensive nowadays too, after the pandemic. So $100,000 doesn't really get you that far anymore. So just be, kind to yourself, but also be mindful that, hey, you know what? I think I may need a second person or another person that can help me take a look at my habits to see if there's something that I need to change, so that way I can, save for the future, save for my financial goals and stuff. So we all know that money is behavioral as well. So again, small choices become lifelong habits, and habits shape your financial future. As we know, habits are hard to break. So it's really important that at first you address what it is. Second, you do your best to try to fix that every day. And so, all right. And what is financial wellness when it comes to money habits, right? So a lot of times when people hear the words financial wellness, they often think it means like being wealthy, and that's not necessarily true. Financial wellness means feeling in control of your finances, right? So it's about knowing your bills, knowing that your bills can be paid, having money set aside for emergencies, and making progress towards your future goals. And also financial wellness also reduces stress too. So money is one of the leading causes of stress, but developing healthy financial habits can increase your confidence and provide greater peace of mind. So it's really important that you learn to manage your debt and your money responsibly. So a lot of times we look for emergency savings. People don't necessarily, the people that I talk to are asking, what is a good amount to save for an emergency savings? Is it supposed to be 9 months of living expenses? Is it supposed to be $1,000? Well, it depends on to where you're at in your financial journey, right? So if you have some high interest debt, then it's best to maybe put aside $2,000 or $3,000 just for emergency savings, and then pay off your high interest debt first, and then really work towards your living expenses to save up about 6 to 9 months of living expenses. So that's usually the better step to go. And so again, financial wellness really does look different for everyone. So for one person, it could mean like paying off your credit card debt, or even paying your credit card on time, right? For another, it may mean saving for retirement, or buying a house, or paying off a house, paying off student loans, stuff like that. So really, it really prepares for your future goals, and having a peace of mind is really important when we talk about money and finances. Again, another statistic from FINRA 2022, out of 5 households in the U.S. spends more than they earn. And a lot of times it's because they're just not making enough to survive. It's mainly just survival. So these people are not out there, getting a $1,500 monthly car payment or anything. It's just a matter of just kind of trying to survive, trying to put kids through school or daycare, things like that. But if you find yourself in this situation, we can certainly meet and see if there is anything that we can shave off for the month, just so you have some extra money towards the end of the month to put towards your emergency savings. So the first thing you want to do is, assess your current financial future. You can't really, improve your financial situation if you don't know where you stand today, right? So think of it like visiting your doctor before recommending treatment. Your doctor really checks out everything. Take a look at your overall health, and then they'll make, they'll they'll let you know what you need to do to get better and stuff. And your finances deserve the same kind of attention. Now, something to know, like, it's surprising how many people come to me and I want to ask them, what is your total income? And they don't know what their total household income is. It can include yours, it include, your significant other, or any other side gigs that you're working. So really, just know the basic numbers, right? Some of the numbers to know, your income. Knowing your income helps you understand how much money is available to cover your expenses, how much you have available left to save, and what you can put towards your financial goals. And then next thing you know, the next thing you really want to look at is your monthly expenses. Now that can be your fixed expenses. Those are things that come up every single month, about the same amount on the same date, like your mortgage or your car payment or your car insurance. Those are like your fixed expenses. But also know that your variable expenses is very important as well. That is the section that, it's either going to make or break your monthly budget. It's either, whether you're going to put a cap on groceries this month for $400 a month. Are you going over that? What does that look like for you? At the end of the presentation here, I'll do a little demonstration of what a budget kind of looks like. So it's in an Excel spreadsheet. It's going to be available for everyone who wants it. So it's really important that you track your expenses. It shows where your money is going and helps identify opportunities to reduce spending. Third, know what your debt is. If you don't know how much you owe or who you owe, it's good to always go to annualcreditreport.com or even Credit Karma, and it kind of shows you who you owe a balance to and how much your balance is, right? So it's also important to understand that understanding your debt balances and payments help you create a plan to pay off debt and improve your financial stability, and also reduce a lot of stress too once you pay off your debt. So once you figure out what your debt, how much you owe, who you owe it to, it's important to understand the interest rates that are being charged on your debt too, if there are interest rates on it. So that will be able to help you prioritize which ones to pay off first if you're trying to pay off, ones with a higher interest rate first, or should you do a plan where you pay the smallest balance first. So that's a strategy in and of its own. So if you need help trying to figure out your debt, what to do with them, I'll be more than happy to meet with you on that. Again, knowing your numbers, savings, know how much you have saved. That helps you prepare for emergencies and also future financial goals. Your goals can be short-term goals or long-term goals. Short-term can be, I want to move in 6 months, or I want to pay off my vehicle here in about 10 months. Long-term goals can be, I want to pay off my car, I want to pay off my house, I want to pay off my student loans, and I want to save for retirement. So it's important that you, in addition to knowing where you're spending your money, knowing where what kind of debt you have, it's important to also know how much you're saving too. So that's a category that's really, really important in order for you to avoid going into future debt. Know how much you have in retirement. Do you currently work at Mayo and you have a 403B, or is it a Roth 403? How much is available in there? How much of your paycheck is going towards your retirement? Do you have a different brokerage account? Do you have a separate account altogether? Do you have enough money in your health savings account, or do you need to open a health savings account? That is something to really look into as well. So I know with Mayo, you can speak with someone with Fidelity or Item Financial, but here at Mayo Employees Federal Credit Union, we have a department here. We have, our group here with Cetera that can sit down and walk you through it if you need help. And another thing to really know your numbers about, credit scores, right? Knowing your credit score really helps you identify, qualify for better loan terms and lower interest rates. Lower interest rates means lower monthly payments for you. Lower monthly payments mean more money in your pocket for you to put towards your financial goals, right? Plus, knowing your credit score and making sure your credit score is good gives you better financial and also employment opportunities as well. So it's important. Those are some of the numbers that you should really look out for. So how to audit your financial habits, right? So it's really important that you, again, know where your starting point is at in order for you to get towards your financial goal. So by defining what is a financial habit is simply put, it's something that you do with your money repeatedly, often without thinking about it, right? So that's a habit. So for example, like maybe every Friday you order takeout instead of cooking, or every payday you automatically move $50 into savings. And both are habits as well. The important thing is to remember is that habits aren't something we're born with. It's something that we learn from our families or even our own experiences, our environment, and especially social media this day and age, right? So the encouraging news is that if habits are learned, then they can be unlearned as well. They can be changed as well. Again, with financial habits don't become important because of one decision. They become important because they are repeated over months and years. So again, track where your money is going. Review the last 30 to 90 days of bank statements and credit card statements. For a lot of people I meet with, they have anxiety pulling up their bank statements. They have anxiety pulling up their credit card statements because they don't know what's going to show up. They don't, because they'll see a big number for the amount due and they don't have the money to cover it. So they feel a little anxious about that. But you know what? It's worth doing. It really is. Pour yourself a little glass of wine if you need to. Pull up your bank statements and really start auditing. Ask yourself, what did I spend the most money on? Did I spend on too much at, shopping random things, or is it online shopping and Amazon? Do I really need all this stuff from Target when I do, when I walk into Target for one thing, I come out with 10 things that I don't really need? And how much did I spend on my wants versus needs, right? That goes back to, the fixed expenses and variable expenses. I think it's also really important that when you are doing your budget that you have a separate category on there as for guilt-free spending. So we want you to be able to live your life and, and spend your money, but we want you to do it responsibly. We still want you to put a budget on the guilt-free spending. So maybe every paycheck you have $100 or $1,000, whatever it is that's available in your budget, to spend however you please, as long as you don't go over that number. You don't have to feel bad about it. It's your guilt-free spending. Whatever you need to do with that money or whatever you want to do with that money, you can do that. Just as long as you have a set number that works with your budget, right? Are there subscriptions that I don't use or only use seasonally? Sometimes with Hulu Sports, people only use that for during football season, and that's like $90 or $100 a month. So if you're not using Hulu, if you're not using, Netflix, or Fabletics is something that you don't really buy anymore or that you don't really use anymore, you can cancel those subscriptions. So when you track where your money is going, you do an audit on your accounts, you're going to see, oh my gosh, I've been paying for this gym membership that I thought I canceled 6 months ago. So it's really good to perhaps audit your account. I recommend every single month, but if not, then every 6 months, just to see where things are going, right? Just to make sure that money is not leaking to places that you weren't aware of. And you'll be able to see, your habits, the way that your certain things that you're doing throughout the week, throughout the month, like how often am I eating out or making impulse purchases? Do I usually make impulse purchases when I'm stressed at work and then I give myself a little reward to, get through the day? Or am I eating out too much where I need to learn how to cook or, get more groceries versus eating out and stuff? And so those are important things for you to really ask yourself, like what really is important in your life right now. So of course we want you to audit, figure out where money is going, and then figure out what is important in your life. If you're in the stage of life where eating out is most convenient for you, then go ahead and just set a budget for eating out or dining out, and then, just kind of balance it out by lowering your grocery bill as well. Second, we want to review and or create your savings habit, right? So we want you to look at how much you're saving per paycheck, per month, each quarter, each year. With Mayo, you can go to HR and you can change where 2% of your paycheck goes towards one savings account or one account, and the rest of it goes toward another account with another institution. You can certainly do that, or you can set and say, every paycheck, $100 goes directly towards my savings account. That way you don't really have to transfer it yourself. You're getting rid of the middleman, because then you won't be tempted to not transfer that money. So instead, your check is directly deposited into that checking account or savings account. If you want to, you can have two separate entities. You can have one with MEFQ here with us, where you use it on everyday basis or for bills, and then you have another savings account sitting somewhere else too. It's going to be hard for you to touch, so that way you won't be so tempted to spend that money. So look at how much you spend, or look how much you save from each paycheck, right? or per year, how much do you need to save from each paycheck or each month in order for you to meet your financial goals? Some questions to ask yourself: are you paying yourself first? Do I have enough in my emergency funds? Am I contributing enough to retirement? Or am I contributing too much into my retirement? Do I need to go ahead and lower that in order for me to have more money in my paycheck so that way I can pay off, high interest debt? And have more in my emergency savings. So those are really good questions to ask yourself. Where's all the money leaking to? Am I on track to hitting my quarterly or annual savings goals? And are my savings goal aligned with my life goals, right? So that's something to really question yourself. So if your life goal is to finish your your master's program, and but you also want to save, let's say, $50,000 that year, but you're not going to make enough to save that much, is that really realistic for you? So just be honest with yourself and be realistic. If it's not going to match your life goals, if you're not able to adjust your life goals to match your financial savings goals, then you might want to adjust your savings goal to match your life goals as well. And then step number 3, evaluate your debt habits, right? Review all debt and payment history. So it's really important where all your debt is at. What kind of payment history do you have? Are you late on certain accounts? Are you, current on certain account? How much of the balance you have left, and what is interest rate that you're paying on that? So things to ask yourself: do I carry credit card balances, and why do I do that? How come I'm not able to pay off the entire balance? What has kept me from doing that? So things to really address. And do you pay your bills on time? Are there times when you're behind on your rent or mortgage because you wanted to buy something, that was on sale? Then maybe that's, a habit that you need to address as well. Is, I'm going to make this goal and say I'm going to pay all my bills on time, even though there's going to be some good sales. I won't be, sidetracked and try to get that person and then pay my bills later. So that could be a habit that you can be working on too. Am I borrowing money for wants and needs? Do I really need a new vehicle? Am I borrowing money from the bank to pay off the entire balance? Am I borrowing money for a down payment from family and friends? So what can I do to avoid, borrowing money for my wants and needs? Am I getting a loan? Am I taking out a loan for my trip to Europe, or is this something that I need to go ahead and save from paycheck to paycheck? So really things to ask yourself. And is my total debt increasing or decreasing? It's always a goal for everyone to decrease their debt, if not pay it off, right? So, but you may seem sometimes, you're working on one credit card, you're starting to pay all that off. You're starting to pay all that down, but then all your other credit cards balance is growing and growing. So because you're not really focusing on paying those credit cards as well, or you're spending more on your credit card while you're trying to pay off that other, one debt. So it's really important to really analyze your behavior. Yes, you're paying down your credit card, number one, but you don't have enough money to last you throughout the month, so you're putting more debt on your credit card number 2 and credit card number 3. So as you're paying it down one, the second and third credit cards start climbing as well because you're using it still. So it's really important that when you are trying to pay off debt, stop using your credit cards and really just address: is this necessary? Is this a need, or is this a want? While you're spending your credit cards. And then the next one, step number 4, check your financial goals. So you want to compare your current habits to your goals. What are some of the habits that you have that you need to cut out or add to in order for you to reach your financial goals? Are my daily choices really helping you reach your goals? Is this something that I need to cut out? I don't need to go out and eat every day. I don't need, to get fancy coffee every day, because then you can save, $15, $20 that you can put towards your financial goals. That may not sound like that much, but $15, $20 over a course of 1 month and then over the entire year, that really does add up though. And are you spending according to your priorities? Is your priority to save money? Is your priority to pay off debt? Is this something that you are, actively working towards your financial goals on a daily, weekly, quarterly basis and yearly basis? And what financial goal am I actively working on, right? So it's really important to, we can list off 5 or 6, financial goals, but if we're not actively doing things to make sure that we achieve the first goal or the second goal, then you're just, then it becomes really daydreaming, right? I'm daydreaming about how to save money, daydreaming about how to pay off my debt because I didn't really put in the action plans and the steps and how to do that. And how to reach my goals. So it's really important, are you just writing down goals for the sake of writing them down, or, for the sake of having goals, or are you actively working towards your goals? Step number 5, you want to identify your financial triggers, right? So many financial decisions are driven by emotions, right? We talked about money being emotional in the few first slides that we talked about. So again, financial decisions are driven by emotions rather than necessity. So think about a time when you made an unplanned purchase. What prompted it? Were you stressed at the time after a long day? Were you just bored? You can be 2, 3 o'clock in the morning, you're just bored, you're browsing, you ended up just hitting one click buy, next thing you know, it's done. So were you bored when you were shopping, or were you influenced by online advertisement or excited about something that was on sale? So really, once you recognize your spending triggers, it's one of the most effective ways to improve your financial habits. So for example, if you tend to shop online when you're stressed, you might replace that habit by perhaps taking a walk, right? Or calling a friend, or reading a book, or waiting 24 hours before making the purchase. You can move it to your cart and then just don't purchase it, right? Wait 24 hours or 48 hours to see if you still want or still need that item, right? So just a little bit delayed gratification there. The goal isn't to stop enjoying your money altogether. Again, I want you to live, your life. I want you to be able to spend your money in order for you to enjoy life. But really, it's the goal is to actually make very thoughtful decisions that align with your financial priorities. Oops, sorry, just missed my spot here. Financial priorities versus your wants, right? And reacting emotionally to some of these, wants that some of these advertisements or some of these sales that you may be seeing. So sometimes we pay for convenience, right? So Uber Eats, DoorDash, that's convenient, but it's very expensive. And, all these extra fees that they add on. So you might be ordering, a $10 Chipotle order, but at the end of it, it turns into a $25 Chipotle order when you can easily just drive down the street and get it yourself. But sometimes we pay for convenience. You can have like Hy-Vee delivery for a monthly subscription too. So sometimes convenience is necessary, things like, if someone just had surgery but they need their groceries, so they can always order groceries and have it delivered to them. That's very convenient, and it's, a necessity at that point. But sometimes when we're just kind of, not really willing to drive down the street to get our food or whatever it is, then we pay for that extra fees, always the extra tip, always the extra service charges, things like that. So it's really important to really determine, is DoorDash really worth it? Is that Chipotle that you scarf down in 10 minutes really worth the $25 that you could put towards something else too? So just some things to ask yourself there. Action plan. Again, assess your current financial situation, take inventory of your income, expenses, savings, debt, and financial obligations so you know exactly where you stand today. Step number 2, again, set clear financial goals. So we want you to create specific short-term and long-term goals that give your money a purpose and help guide. Again, create realistic budget. So it's really important. In order for you to create a realistic budget, you need to be able to audit your accounts and figure out where your actually starting point is at. So we want to maybe perhaps set a goal of $800 per month in groceries, but after auditing your accounts for the last 3 to 6 months, you were actually spending $1,400, $1,500 in groceries, right? So if you really want to cut down from $1,500 to $800, that may be very difficult to do in 1 month without really addressing why it was that expensive in the first place. So we want you to be realistic, right? So maybe you can't drop down to $800 that next month, but you can bring it down to maybe $1,400 next month, and then the following month it'll be $1,300 in groceries, so on and so on, but as long as you work towards that goal. So again, be realistic with your budget, and we want you to be able to follow your budget instead of falling off the budget within like 2-3 days of having the budget into the month. Again, that comes from tracking your spending in order for you to be realistic with your budget. Again, talking about savings, paying yourself first. We want you to have an emergency savings fund. So that way, in case anything happens, you don't have to put on credit cards, you don't have to borrow from the bank, you don't have to borrow from family and friends. We want you to reduce and manage your spending, so we want you to develop a plan, right? So, but most importantly, we want you to really celebrate small wins, recognize milestones and progress along the way to stay motivated, to reinforce positive financial behavior, and just say, you know what, I went to spend 7 days without going out to eat. That's a little victory for me. So recognize that too. You can say, you know, I went this past paycheck, I was able to transfer $100 into my savings account. That's a small victory, so address that as well. So that way you can tick off a little box. You can write down some of the accomplishments that you made for this week or for your paycheck or for the month. So it's really important that, yes, you do have some, you know, restrictions and some budgets that you're following, but also we want to address some of the wins as well. Review your progress regularly. So again, if you can always have a budget buddy that you can meet with every month, or you can meet with a financial wellness counselor. Again, it's always free to meet with me here at MEFQ. We have a couple others that are training in as well. So it's really important that if you just want someone to hold you accountable, if you just want someone to kind of look over your budget to see if you need to move things around, so you're more than welcome to reach out to us and we can get you set up with someone. You know, and something that really is important is, you know, with you guys being here, you want to continue learning about money. So seeking financial education through books, classes, plenty of podcasts out there, plenty of YouTube videos out there that can strengthen your financial knowledge and confidence, right? So the more we know, the more we're able to control our habits, the more we're able to shift our mindset a little bit when it comes to you know, what you think about money. And we want you to stay consistent. So remember that financial success comes from small repeated actions over time rather than occasional large efforts. So staying consistent is really the key as well. So shifting your money mindset, where does your money mindset come from, right? Our money mindset is often formed, again, during childhood through family experiences, cultural influence, personal financial successes or struggles. And if we grew up hearing that money is, you know, is scarce and it's stressful, unattainable, those beliefs may continue into adulthood. So the first step to financial growth is really recognizing the beliefs. What are you constantly telling yourself about your relationship with money? You know, I get people that talk to me, one of the first things they say to me is, you know, I'm not good with money. I've never been good with money. I don't know where my money goes to. So we want you to really shift your you know, inner voice, the way you talk to yourself, the way you identify yourself. We want you to shift that as well. So again, it's really important to recognize the beliefs that no longer serve you and intentionally replace them with healthier ones and more productive thoughts, right? So again, identify your money story, the beliefs you heard as a child. Is it true for you today? Are you struggling, or are you choosing to struggle because you want to choose that identity still? Recognize limiting beliefs. Negative beliefs can create self-fulfilling financial behavior. So if you're saying, I'm bad with money, I might as well just, you know, buy that new purse because I'm bad with money. That might be an identity that you want to go ahead and stop telling yourself. You know what, instead of saying I'm bad with money, it says, I'm working towards improving my financial behavior, so I don't need this purse. At this time, I don't need a new bike at this time. So would a person that is good with their money make that decision that you want to make now? And challenge those beliefs. Ask yourself whether your beliefs are facts or are they assumptions, you know, replace limiting thoughts with empowering ones. And a growth mindset really does allow you to see your mistakes as learning opportunities rather than failures too. Building a positive mindset, we again want you to focus on your progress and not perfection. It's really important to celebrate the small financial wins and improvements. Practice gratitude. Really focus on what you have now, what you can control. Yeah, you don't have $1 million, but you can actually control all your, you know, actions that you do day to day, month to month, year to year, in order for you to reach that first $1 million, right? So that's a goal for you to reach, if that's what it is. So we want you to really focus on what you have now, and really, you know, what you can control. So be grateful for what you have. Yes, I have a roof over my head. I'm grateful for that. I have a vehicle that I can drive that's safe. I'm grateful for that too. So little things that you tell yourself that you have, right, that might be a luxury for someone else is you know, is something that you see as an everyday thing. So develop healthy financial habits. Again, create routines such as budgeting, automated savings, review your finances regularly. We want you to continue to learn about personal finances, and really acknowledge. So knowledge really does reduce fear and increases confidence in financial decision making. So again, a couple things to say, shifting your money mindset. Someone that says, I'm bad with money, you can say, I am learning or relearning how to better manage my money wisely. Instead of saying, I never have enough money, you can say, I'm becoming more intentional with how I spend my money every day. So just those little mind shift really just works wonders. Simple ways to save consistently. So we can't talk about money habits without talking about savings, right? First things first, we want you to pay yourself first. What does that look like? It looks like you automating, money into a specific savings account towards a specific financial goals. It looks like you, after that, then you can pay all your other bills too. Paying yourself first, meaning that you are really putting yourself first in case there is an emergency, so that you have that money available in an emergency savings account. That's what it looks like. So you want to start with a very specific savings goal. It can be $1,000 saved within the next 6 months, or $10,000 saved within the next 6 months, whatever is available in your budget. We want you to automate your savings and services that we have available to help save money. We can do automated transfers or CDs. Our rates are really competitive right now. It's really good. You can put it towards an IRA or Roth IRA or money market account that we have available here. So keeping your savings account separate from regular checking account, I find that is really helpful to a lot of people to keep their money saved. They just pretend that savings account is not there. They're just going to work with their main checking and savings account. And also look for savings options that pay at a higher rate. You can certainly open up a high yield savings account. It's really, once you put up high yield savings account into the internet, they're going to have plenty of places or plenty of businesses that are offering that. So really do your research and do your due diligence before opening up an account. Some bad money habits. So money habits to change and improve your financial picture. So instead of spending more than you earn, it really does lead to debt and financial stress. And that's a bad habit, right? So another bad habit is ignoring savings and delaying investments. You can leave vulnerable. It can leave you vulnerable to unexpected expenses and limits your potential for wealth building. Failing to budget. Without a budget, you may struggle to manage your expenses and reach savings goals. Overusing your credit cards, impulse spending, neglecting emergency savings, not checking your account balances daily or weekly, and really relying on cash advances or day loans, payday loans. So those are some bad money habits that we want you to kind of recognize that they're not positive one, they're not helpful money habits. So you find yourself in this situation, we can certainly help you keep yourself accountable too. Actions to take now, again, automate your savings and bills. I can't stress that enough. Automating your savings is the easiest way to save more money. And again, paying yourself first and track your daily spending. At the end of the night, you can certainly just look at your debit card or credit card statements or transactions and see, what, I went out to eat twice today. I didn't realize that. Why did I do that? So then the next couple of days, you're not going to be eating out because you want to meet your financial goals, right? And you want to change some habits too. Again, set up automatic payments in all bills. It's the easiest way for you to keep your bills payment on time, and perhaps pay more than a minimum due, or if you can, pay the entire balance if it's on your credit card. Actions that you can take now, start small, work your way up with each pay period. You can say, you know what, I can only afford $5 right now to transfer to a savings account, and eventually it becomes a habit. And then in the next 6 months, you can increase it to 100, and then the month after that, the quarter after that, you can certainly increase it to maybe $200-300, right? So we want you to start small, but it's important to start. Look for ways that you can reduce your spending, cut down your non-essential items, right? Removing shopping apps and credit cards on your phone, and unsubscribing to advertisement emails, like certain emails from Macy's or Target, whatever it may be. And have weekly financial dates, whether it's with yourself, an accountability partner, like a budget buddy, or with a financial wellness counselor. So some of the tools and supports that we have available here, you can always meet with me virtually or in person, and ideas on how to better plan your future and expenses. And again, we have 2 other financial wellness counselors as well that can help you. We want you to use tracking tools to manage your expenses. Again, you can always email me for the template, but there are plenty of good apps out there that some are free and some that you have to pay a small amount for. So it's really, really important that you really explore what works best for you. You might want to try out like 2-3 different apps to see which one is easier for you, and ones that you can keep up with. So the most important thing is that you make it a habit. You make it a daily occurrence, that you check your transactions to see if you're on the right track to hitting your financial goals. You want to keep track of your expenses with services that we have offer. Of course, we have online and mobile banking, bill pay, e-statements, and automatic savings transfer. Budgeting tips, how to budget. You can use a spreadsheet or an app. You can make tweaks as needed. So we'll go over here in just a little bit. So before buying anything at all, you should ask yourself, will this add value to my life? Am I buying this for the right reason, or is this in my budget? Can I pay for it in full right now, or do I need to save for it and maybe try to buy it in about 6 months or so? Is this the best place to buy it and the right price to buy it, or is this the right time to buy it now? You know, you can, again, wait the 48-hour rule, or maybe 72 hours for some people, you know, just to see if you really need it, or is it a want, or is it an impulse buy purchase that you're trying to stop. Save consistently. So we'll talk a little bit more. I'll do the budgeting, a demonstration now. And let me see here. Okay, perfect. Oops. All right. There we go. Okay. So here, this is the zero-based budget that I like to work with. Zero-based budget means that for the entire, whatever your income is, you've given every single dollar a job, right? Every dollar has a job, so that way at the end of the month, you literally have zero left, you know, for you to do anything with. But I want to show you the different categories that you want to put into, because remember, we talked about knowing your numbers, knowing your income. You know, how much are you bringing in per paycheck or per month? How much is, you know, your partner, or if there's additional a second source of income, you know, you can put it all there. What is your total? So for when you get this demo spreadsheet, this information will be on there. So remember, Joe and Jean isn't a real person. It's something that I just put down for demonstration purposes. But here, know your numbers, your fixed expenses. Remember, these are things like that you pay for every single month, pretty much on the same date of each month and pretty much the same amount each month, right? So your mortgage, your rent, electricity, we know RPU can vary by quite a bit from winter to summertime. Right now it's quite hot, so it might be a little bit more expensive, you know, for next month when you get your July bill. And you know, Minnesota Energy ranges quite a bit too, but it's really important to still, you know, have it due on the 6th of each month and just have an estimate amount, like an average. Car insurance, student loans, your credit cards are all pretty much due on the same date each month. So those are your fixed expenses. The variable expenses is really where it makes or break your budget, right? So these are things that varies. When the kids are home during the summertime, your grocery bill might be a little bit higher. Do you want to allocate $800 of your budget towards groceries, or do you need to increase it a little more during the summertime and decrease it a little bit more when the kids go back to school? Household items, you know, things are like shampoo and, you know, hand soap, paper towels, things like that, household items, miscellaneous things. How much are you spending each month on that, right? Because we want to take a look at groceries, like the food that we're just eating, because then I want you to compare it to how much you're spending and eating out. So again, have a budget for this. You don't have to have a monthly, just set it up to every paycheck. I always recommend people just budgeting paycheck to paycheck. It's not necessarily living paycheck to paycheck, but you're budgeting paycheck to paycheck, meaning that you're budgeting for that one paycheck and see until the next paycheck and see how much is left over. So that way you're not really waiting for the entire month to really allocate your money. And entertainment and go now, again, I want you to have fun. I want you to go out there and spend your money and have fun, but we want you to put a budget on that, right? So some of these things may be little. So personal care could be something like nails or haircut, whatever it is. We want you to have a category for hobbies too, if that, you know, if that's what you want. Category for pets, if that's, you know, what you have going on in your life. But again, we want you to have a budget for these, right? It's an aim for us. It's like a goal for us to not go above that number. And I also want to make your savings and sinking funds part of your monthly expenses, right? Again, when I talk about paying yourself first, we want to go ahead and include your savings account as well. So here you can have, you know, emergency savings each month out of your $6,400 budget. $1,200 of that is going towards your emergency savings, because right now it could be that you don't have anything saved and you're trying to save maybe $10,000 in, you know, in 10 months or in 8 months or something. So Christmas is coming up. It's never too early to start paying, you know, saving for Christmas. So for this budget, they're saving $205. So it can be, you know, $100 here per paycheck. That comes out to a little bit, you know, under 200, over 200. whatever it may be for you. Car maintenance, we always need to get our oil change. Tires, if you need new vehicles, if you need new tires and stuff, that can be expensive depending on what kind of vehicle you have. And house maintenance, right? We want you to still have a category to save that. So in case you need to get a new filter or you need to get a new air conditioning or whatever it may be, you can take it out of your house maintenance account. And finally, miscellaneous can be travel, it can be anything. So whatever is going on in your life, you determined what savings category you want or what kind of sinking funds you want. But it's also important to know when you start that, right? So we want you to have, let's say for example, this family, they want to go to Europe and the goal is $10,000. The start date was May. And they want to save it by May 2027. I'll change the year here. And it really determines how much you have to save each month in order for you to reach that goal. So you really can work your way backwards. So as you see here, out of $6,400, every single dollar has a job to do, right? So even though it says zero here, it's not really that you don't have any money left over. It's just that you have different categories. You have different funds that are allotted to different parts of your life. So you know exactly how much you have to spend. So really, it's not really a restriction. It's more like a freedom. Like, oh, hey, you know what? I have $100 to go entertain myself for this month, or $50 per paycheck. Whatever it may be, at least you know that you don't have to, at least you know how much you have available towards that category. And then with the savings account, it causes, once you know that you have emergency savings set aside, Christmas money set aside, all these things, and if, it's gonna happen anyways, you're gonna need your car maintained, you're gonna need your house maintained. Christmas comes at the same time every single year. Emergencies will happen, at least then you know that you have accounts and money allocated towards, going towards those financial goals. So when I meet with people, a lot of times I meet with them every 2 weeks. Again, budget per paycheck, right? So if they are making, making $1,500, or this paycheck is $1,500, I would just go ahead and just put it here. So I think I said numlock's not on. But you can always put here like $1,500, whatever your paycheck is, and then write down whatever bills that's due from that between this paycheck into that next paycheck. So if you need help like just navigating this template, let me know, and we can certainly go through it together. So you can always write down or see how much you have left over, savings and stuff for each paycheck. If you are more of a 20-30-20 person where 50% of your income goes towards your fixed expenses, 30% goes toward variable expenses, and 20% goes towards savings and debt, this is, the budget template for you. So at least then you know exactly where money is going. So if you get this template, you'll get something called bird's eye view. Again, this does not belong to anyone, but it kind of gives you an idea. What's expected? What did you actually spend? What do you expect to spend each month and per year? How much you paid for those months? And then at the far right here, you're going to see year to date. And as you put the numbers in, the year to date adjusts itself too. It changes. So you can put whatever category here. So it's just a way for some people to really know where their money is going to. Account inventory, I encourage people to really kind of have a sheet in case something happens, your family and friends know where all your stuff is at. You don't certainly have to put username and password in here, but you can put down, different banks that you have, what type of accounts, routing, checking account number. If something happens to you, who's the beneficiary? Do you have a beneficiary set up already? Investment accounts, where it's at, some assets. It could be your vehicle, wedding ring, whatever it is. Insurance, do you have enough to cover? If things happen, do you have enough in your savings account to pay for a deductible if you need to pay that for your car insurance if something happens? Your credit cards, who do you owe your money to? Your loans. It's just an inventory of your finances, where things are at, how much, the balance is, things like that. Finally, if we're doing debt repayment together, then this is something to really look into, the debt avalanche and also debt snowball method. So the snowball will be where you list all of your debt off and you pay off the smallest balance first. It doesn't matter what the interest rate is, but you can pay the smallest balance first. And then avalanche is the exact opposite, where you list off your credit card based off of your interest rate, and we make that the focus first. So again, I'm just going to going through it pretty fast, but if you want this, you can certainly play with it and put in your own numbers or, fix whatever it is you need to do. But the most important thing really is just stay consistent, really know your numbers. Figure out, once you're auditing your accounts, really going to see, what you spend most in your variable expenses. And again, these are things that are not concrete. We want you to reach these goals. We want you to maintain, stay within those goals. But again, things shift from season to season. So summer might be a little bit more expensive for you for outings, eating out because you're traveling a lot, or it could be that summer is a little bit cheaper for you in the school year. Fall and winter is a little bit more expensive for you. But it's really important to really recognize what some of your habits are, how you got those habits in the first place, really address some of your inner voices and see if you need to talk to someone about how to change, identifying yourself as someone that's good with money and really seeing if that's what you need help with. You can more than welcome talk with us so that way we can help you get on track or try to figure out what you want to save money for. So again, really working on your habits, recognizing that, and making small changes throughout the day, throughout the year, throughout the month, weeks, things like that, in order for you to really break your habits. And most importantly, it's really stay consistent. So that's really hard to do for a lot of people. But that concludes our presentation. If you guys have any questions at all, please feel free to reach out to us. And I don't think there's any questions, right, Mike? Okay, perfect. Well, thank you so much for your time today. I hope everyone enjoyed